So we have to talk about AMC because
Oh yeah.
holy cow, it's like this is GameStop all over again, truly. I mean, I was saying to Todd before we hit record, I've just had it up in the background on my Fidelity terminal ever for the past half an hour or so, and it's gone from down 0.5% to all the way up to about plus 10%, and now back down to 6.5 to 7. And like every tick, it's fluctuating 0.5 to 0.75%. It's absolutely insane.
It's crazy. It's crazy. It all got going this week when they came out and announced that they had sold $230 million worth of shares to Mudrick Capital. And that really got people excited because they thought, okay, well, they have an extra 230 million on the balance sheet. Maybe that's enough cash to bridge them until, people are coming back and watching movies and buying tickets and buying, refreshments at the box office and all that stuff. And, maybe they can pay down some debt, whatever. But Joe, wouldn't you know it, before the day was out, Mudrick had already sold the 230 million it had bought for a cool 20 to 30% gain.
Yeah, that's a pretty sweet gain. And if Todd, could you possibly pull up the intraday chart on this, because it's absolute insanity, and I just want to demonstrate too for our viewers who are watching on YouTube, and for the listeners, we'll give you as good a walkthrough as we can. But it seems like on my chart here, it bottomed out around 38 earlier.
Yeah, I have the intraday chart up right now, Joe, and listeners. If you can't see it, we do put these up on YouTube as well. Just Google us, Limelight Alpha, Talking Stocks. Subscribe and hit the bell. That way you know whenever we post something. But you can see on this intraday chart, yeah, they actually halted it, Joe, at one point today for volatility. The swings were just so wild. But yeah, we went from around 10 o'clock this morning, 55, got down 40. Wow, actually, we opened down. We opened, $60 to $45 to $55 to $38 to $65. And I think currently we're trading at $67 per share, up 6% as of 2 o'clock today. If I click over to the daily chart, so you can see this past week's activity, I mean, Joe.
That's parabolic, right?
20 to 70
to the moon.
In the moon. In 4 days. And I mean, that's crazy. I mean, this is, the big question would be, what do I do now if I happen to have caught this move? I mean, most people, the volume in this, Joe, is absolutely mind-numbing. I mean, there's 471 million. There's more. Okay, so there's way more shares that are trading per day than actually exist in the wild. So that shows you that this is the day traders. They're grabbing 20 cents, $1 over and over and over again. They're slinging this thing. So, people say, oh, it's a short squeeze. It's a short squeeze. Well, shorts only accounted for like less than 1 day of average trading volume. And I think that yesterday, I was listening earlier today to CNBC. I think they said that if every person had covered their short position yesterday, it still would have only equaled 1/8 of the volume that traded hands.
Wow.
1/8. So this is got a life upon itself. So, and it's like you said, it's GameStonks all over again. And great, awesome. I mean, hey, congrats. If you're out there listening and you nailed this thing and you rode this thing, awesome. Bring the register, put some of it in your pocket.
Absolutely.
Joe, we've talked on the show before. I have a rule, sell the vertical. So when you see that rocket ship upwards, take some off, put it in your pocket. You want to let some ride, great, but recapture what you put into it as
exactly.
An investment.
I was about to say that. At least cover your cost basis. I am unfortunately never thought I'd say I regret not being in AMC, but here we are. 2021, even weirder than 2020, right? But yeah, if I did have money into this, I would definitely be selling at least what I put into it, and then, as Todd said, you can let the rest ride. So while we're on the topic of AMC, I think they're in a pretty interesting place right now, right? Because for all intents and purposes, just about every state in the country, at least, and here in New England included, we're pretty much back to normal. And so I have to think that the summer movie season, whatever the heck they call it, I have to think it's going to be fairly normal, quote unquote. Am I right to say that?
Well, I mean, in the year-over-year change doesn't matter, right? You go from 2 people in a movie theater to 4 people in the movie theater, you've doubled your revenue theoretically, right? So,
That's
I mean,
right.
the year-over-year comparisons for this company are going to be crazy. A lot of people want to say, oh, but it's trading at way more than its market cap was pre-COVID. Okay, yes, but valuations reset at different points in life cycles of companies. Just because something was only valued at 3 times sales pre-COVID doesn't mean that post-COVID it can't be valued at 10 times sales or whatever. So I think that you have to be careful about anchoring bias when it comes to figuring out what the value should be of a company. When we talked about GameStop, it was the same. I remember us having a similar conversation. Looking, maybe it could trial note, you put it in the show notes, Joe. People can go back to
Yeah,
the
I
GameStop
will.
episode. But it was kind of a similar situation where people were like, well, what's the value of this thing? The thing is going out of business. But, you can make an argument to say, well, is GameStop worth 5 billion as a company? I think that you could make that argument. So then you need to then look at AMC and say, okay, well, it's a 25 billion market cap. Can you justify a 25 billion market cap? Maybe. I mean, if revenue gets back to, they were doing on a quarterly run rate in 2019, they were doing 1,500 a quarter. So 1.5 billion, sorry, per quarter. So 6 billion in revenue. So it's trading 4 times sales, pre-COVID sales. I mean,
That's
that's
not that much.
no. I mean, you can. I think you can make an argument here that this company, if it survives, and that's the big if it survives, could be worth the money that it's valued at now. But just remember, listeners, that stocks don't go up or down in a straight line. They don't, and so I think it's just prudent. The other thing I think it's important, Joe, that we mentioned, and I'm going to share my screen again, because I want everybody to see what I'm gonna bring up here. I've got Seeking Alpha's page up. I pulled up AMC. You can see at 1 o'clock today, quickly raises 587 million, wrapping up its 11.5 million share equity offering. So they did the Mudrec Capital deal early in the week that got them 230 million. They just went out today and issued another 11.5 million shares to raise another 587 million. So they're doing the right thing for the market, right, Joe? I mean, they're raising money for their balance sheet. They're taking advantage of this situation that there's demand for the shares. But that being said, when they did, see if this is the right one, when they did the offering this morning, they're going to use it for general purposes. And they also said in their filing that, oh God, where the heck is it? Joe, I can't find it right now, but
Oh, bummer.
yeah, listeners, if you go on and you actually read the filing for the offering, they say that the price of the shares is detached from reality, essentially, and that you could lose everything. You should not buy shares unless you're prepared to lose everything.
Isn't that true with any stock?
Yeah, but very rarely do you see a company come out and like bold and underline and say, listen, buyer beware on this purchase. So on the one hand, I think that it's great. We're in this new environment now where we've empowered retail investors to go out and find and exploit opportunity in the marketplace in a way that's never really happened before. I mean, Joe, back in the olden days, if a mutual fund or a hedge fund wanted to accumulate a position in AMC, they would call up, the sell side brokers, the big ones on Wall Street, and say, place an order for 10 million shares. That would have to get worked over the matter of days. So a little bit here, a little bit there. You're calling other brokers on the street. You're saying, hey, fill me 100,000 shares. I got more coming up behind it, whatever. Today, the reason that that was very orderly. But today, what we're seeing with retail investors is they're coming in buying 100 shares at a time or whatever. It's small, very small lots. So they're getting instant filled, and they're getting instant filled every time it goes up another penny. So the bid offer just keeps climbing, and it just keeps getting crossed like that. So they've kind of, the retail investors have kind of found a loophole in the way the system was designed to transact for a lot of shares, because now you've got thousands of investors submitting buy me 100 shares, rather than say one really big institution working an order over the span of a week or a month or whatever.
Right. Yeah, just to wrap up this conversation, I just wanted to say that in the time we've been talking about AMC, the price has fluctuated between $60 and $68 and everywhere in between. So good lesson on volatility for everybody.
15% spread just in the 10 minutes we've been chatting.
It's mind-boggling to just watch this ticker. Like, I could do this all day.